In this lesson, we will discuss the Georgia Real Estate Commission Rule 520-1-.08, which deals with trust accounts and trust funds. Let's start with the designated trust or escrow account. Brokers can have more than one trust or escrow account as long as they inform the Commission with the account information within 1 month of its creation. Licensees have to give any cash, checks, or other consideration to their designated broker as soon as possible. This extends to consideration received as a result of property owned by the licensee in the form of a security deposit or other funds related to the property. Brokers must keep any consideration received in a trust or escrow account registered with the Commission. If the account is interest-bearing, the broker must obtain instructions on how to distribute any interest received, and these instructions must be signed by all parties. In some cases, a broker maintains their own funds in a trust or escrow account. Here are the rules governing how these accounts can be used. The broker can maintain a minimum balance required by the financial institution plus a reasonable amount for any service charges to be paid. The broker can place commissions due to them in the broker's trust or escrow account if the accounting system properly accounts for them. Each month, the broker must remove any funds exceeding the minimum amount allowed. Checks made out to the broker can be used to withdraw funds from the account. For example, broker Brody receives a commission check and has a software-based accounting system that properly tracks all deposits and withdrawals for trust and escrow accounts. He has met the requirements and can deposit the check in the account. Now, we turn to the accounting requirements of trust and escrow accounts. Every broker has to maintain an accounting system to include the following information: names of the buyer and seller, or names of the tenant and landlord, amount and date of funds deposited, identification of property, the amount, date, and payee of checks drawn on each transaction. For example, broker Brody forgot to include the address of the property when documenting the transaction. He hasn't properly identified the property and fails the accounting requirements for trust and escrow accounts. The following rules govern disbursements from a broker's trust funds. If a broker uses trust funds contrary to any contract for real estate, they will be considered incompetent to safeguard the public interest. A broker can fulfill their duty to account by using the trust or escrow account in different circumstances, like rejection of an offer, withdrawal of an offer, distribution of funds at the closing, distribution of funds based on a written agreement of all parties which is separate from the contract to hold the funds, filing of an interpleader action, distribution of funds based on court order, the fulfillment of a contract requiring the deposit of funds. A broker cannot disburse funds until they have reasonable assurance that all funds have been received. If the broker makes a disbursal without the agreement of all parties must receive written notice. For example, broker Brody receives a court order to disburse money to the seller of the property in a transaction. He complies, but the buyer complains. As long as all parties are notified in writing, Brody has satisfied his duty to account since he received a court order to do so. A broker can claim earnest money as their commission in connection with a real estate transaction if, in a rental agreement, the tenant has taken possession of the property, a sales transaction has closed or expired, or the broker received written agreement from all parties that the broker is entitled to a commission. Refunds of earnest money are credited at closing or paid by check. The total of all checks should reflect a zero balance, except for the broker's commission. If a licensee owning an escrow or trust account files for bankruptcy, they must notify the commission immediately. For example, broker Brody files for bankruptcy but doesn't notify the commission. He has failed to comply with this commission rule. Property management or association management trust accounts can also be set up by brokers who are managing a property for rental or assessment purposes. These accounts have to be separate from the broker's other accounts. The commission must be granted access to examine trust accounts during the renewal process or at any time for a reasonable cause. Further, the broker has to reconcile the account each month and has to provide a written account of the reconciled balance. The broker's trust liability is the total deposits required, received, and held by the broker during a transaction. For example, if broker Brody forgets to reconcile his trust and escrow accounts for 2 months in a row, he is out of compliance with the reconciliation requirement of the commission. During the renewal process, the broker submits the following information to a renewal trust account examination: a summary of broker's trust accounts, and a report from a certified public accountant. Note: both must be filed on forms approved by the commission. For example, broker Brody submits a report from his CPA, but it's not on a form approved by the commission. In this case, Brody hasn't met the requirements of the renewal trust account examination. In the case of abandoned funds, a real estate licensee can't disperse any funds from a trust account unless written authorization requires a dispersal. The licensee has satisfied the requirements of the Disposition of Unclaimed Property Act, or the licensee is following a court order. Finally, when a licensee owns a portion of the property and receives trust funds on the property, those funds must be placed in a trust account. Understanding the rules associated with escrow and trust accounts is important for all licensees, not just brokers and broker agents. If a broker fails to follow the rules of the commission, they are ultimately responsible. However, salespersons under a broker are impacted by the decisions of their brokers. So, it's essential for all licensees to understand the regulations.